Imagine if every time your neighbor bought a pizza, a tiny drone flew over your house and dropped a $5 bill directly into your hand. You didn't cook the pizza. You didn't deliver it. You just sat there, being awesome. Sounds like a hallucination, right? Well, in the stock market, we call that a dividend. Let's go back to our friend Tony from the pizza shop. Business is booming. Tony has so much extra cash from selling crusts that he doesn't know what to do with it. He's already bought a gold-plated oven and a disco ball for the kitchen. Tony looks at you, his loyal shareholder, and says, "Hey, thanks for sticking with me while I was just a small shop. Here's a thank you check for $1 for every slice of the company you own." That thank you check is a dividend. When a company makes a big fat profit, they have two choices: reinvest it, buy more ovens; share it, give it back to the owners. Think of it like being a landlord. The stock is the building, and the dividend is the rent the company pays you for staying invested. You still own the building, but now you've got extra cash for more, well, actual pizza. But here's the catch. Not every company pays dividends. Some cool tech companies are like that one friend who never carries cash. They keep every penny to grow bigger. Would you rather own a stock that pays you $5 every month like clockwork, or a stock that pays $0 but might double in price in 5 years? Team cash now or team big win? Tell me in the comments. Dividends are the ultimate lazy man's way to build wealth. If you want more tips on making your money work while you nap, hit that follow button. Now, where's my drone with that $5?